Good morning, everyone, and welcome to the On Time, On Target Morning Brief, where we bring you live from Vegas this morning. If you can see Vegas skyline in the background there. I'm in the Luxor up on the 27th floor. It's a pretty good view of the city there. But yeah, back in Vegas for a volleyball tournament. Pretty cool. I have one daughter on the Eastern time zone. Doing her volleyball thing this weekend. And of course, I have my other daughter right here with me in Vegas doing the Vegas qualifier. So pretty cool to have both girls competing at different locations all across the country. So, all right, let's talk about the market. Well, guess what? The market is back, right? We had the huge sell-off from the first 3 days of the week. The world was ending, and now it's not. And all of a sudden, the problems that we were worried about on Wednesday aren't problems anymore. Well, guess what? They are problems still, but they weren't as big of a freak out deal as was being portrayed on Wednesday. But now is the time to take the risk off. It is time to do the mature thing and stop expecting, the 20, 30, 40% gains year over year that we've been kind of used to, and come back to, a more reasonable approach where you actually do have a fixed income component to your portfolio, and you might have some inflation protection, especially in like 401ks that I've been reworking all week long, or the past couple of days, I should say, not all week long. But yeah, looking for some different things that we aren't normally in. So that's what's going on. That's what you'll see within your portfolio as well. Also, what is back? Well, Doge is back. So you had Elon Musk yesterday or two nights ago saying that Tesla's not going to accept Bitcoin anymore. It costs too much energy to produce. We talked about that a little bit yesterday during the show. But yeah, it was let's freak out and sell all the crypto. 1/3 of $1 trillion was the loss in crypto that that happened yesterday. Well, last night he kind of walked that back and started making some different tweets about how maybe Tesla should accept Dogecoin to be able to buy your Tesla. So I think Doge is back, Bitcoin's going to be back. Things are on the way up today as well. All right, and this is pretty much a snapback rally. So we did have a bunch of selling on Wednesday. It was pretty amazing. Things are snapping back, but I don't think that means we are in the clear by any means. All right, if you're catching us on a replay, thank you so much for checking us out. I'll make sure you subscribe, hit the notifications bell. If you want to join us live, what you don't see is a chat window and a Q&A window that are off to the side where I'm putting in, as people join the room, I put in the topic and the longs and shorts of the day that we're going to talk about. All right, let's go ahead and get rid of me off the screen here and share out our lineup card for the day. There we go. All right, so here we are for the lineup card for this morning. Make sure you have your windows set up appropriately as well. Looks like burner, you just have panelists in there. You want to have panelists and attendees every time when you log in there. Standard disclaimer applies. Make sure you have do your own due diligence before acting upon anything you see in this presentation. Full disclaimer information is available at ototnow.com. All right, welcome to a Friday, May 14th, where we're going to grow our money, protect our money, and live off our money. Today, specifically, we're talking about living off our money. We don't talk about this a lot in the program, but we do want to talk to this regularly, as far as, because that's the point of it all, right? You come up with an entire bunch of money over the course of your lifetime, hopefully somewhere in your 40s and 50s that gets to over $500,000. If you're set up fortunate or have been more aggressive and it's paid off, you could be up over $1 million, and that assumes you have like a standard 6-figure salary, right? So excuse me, or even more if you've been a small business owner, maybe if you have an equity event, whatever. When you get towards the retirement phase and you go into the can I retire, it becomes a big math problem. You take basically what you need to live on, and then you subtract out any pensions you're going to get, which again, Social Security is the primary pension for most people. And if you are a 6-figure type person, you're going to max out Social Security, which means you are going to make about $3,000. It depends on when you claim for sure, but $3,000. There you go. The $3,000, and then if your spouse If the spouse didn't work, they can claim up to half of that. If they worked on their own, they may get their full benefits. So you should be looking at anywhere in retirement, $3,000 a month for an individual. That's $36,000 a year. So if you need six figures to live off of that, then that's your math problem, right? How do I make up the other 64,000 in that case? If both of you are fully claiming because you're both had professional careers, you could be getting up to 72,000 already and only need to get 28,000 out of your portfolio. So that's the math that you start with. You just subtract and go, okay, what can I get out of my portfolio to be able to see if I can retire? So that's what we're going to talk about today. We're also going to talk about the question today, which is what is yield? Yield can be confusing because it moves on a daily basis. And when you calculate your portfolio and how much money's coming in, if you use a moving yield number, portfolio values change every day. So that can be a little bit mess with your head. What doesn't change on a daily basis is the dividend. So say AT&T stock, it's yielding 6%, but if the stock doubles, then it would only yield 3%. And you're like, well, how can my yield get cut in half? Well, the yield did get cut in half, but the checks to your bank account did not get cut in half, right? It's still the same amount going to your bank account. So that's where some folks can get kind of tripped up with the yield, but we'll talk about that here in a little bit. All right, the flow long, short, open, short, long. Today we're going to do a market review, headline review. For long-term investments, we're going to talk about the different ways to generate income. So we'll stop after we get around the market conversation. We'll talk about some people will stay total return for life. Some people will go with dividend investment, which is T. Some people go with real estate investment trust, which I have a phone call later today to discuss with a client on the pros and cons of those. BX is private equity. That's another way to generate a significant amount of income out of your portfolio. Maine is a business development company, so it kicks off monthly dividend checks from doing business development. You can get into preferred stocks, which I normally don't like unless you're in or entering the retirement phase. Then we'll have that discussion. If you like them, I'll put you in them. I generally don't put folks in that. Same thing with closed-end funds. Those are specifically designed to generate income, again, to live off of. And of course, you'd be in high-yield bonds, which are going to get you around that 5%. There is some risk in those bonds. The one thing you don't see up here is covered calls. In any of these scenarios, if you're looking at generating income, you can put covered calls on top of any or all of your positions where you have at least 100 shares and generate some extra income. You will, or you could potentially earn less with your portfolio, meaning the total return might be hampered by that. And we've seen that in a straight up market, but generally over time, it'll generate some extra income for you, even though you could be sacrificing some upside there. So those are some things that we will talk about today. As far as for the short-term trades, what I like is Dash long. They crushed earnings. Snow is Snowflake. They also got an upgrade this morning, and then Coin crushed earnings last night, even though they're not getting a whole lot of love and it doesn't quite fit with our scenario. Dash fits perfectly. That'll be my number one long for today. On the short side, if you want to go short, Aurora Cannabis missed earnings yesterday. You'll see that on the chart, and it's selling off hard. This stock has been beat up significantly. They're switching from the New York Stock Exchange listing to the NASDAQ. Things are not going well with this company. I expect it to continue to sell off today. And the whole marijuana space, really since the election, it popped after the election expecting big things, and it is just not panned out. All right. Contingencies and academic resources are standard. Let me share out to you TD Ameritrade ThinkPipes platform and bring it to the front here. All right, so big picture, let's go zoom out to the S&P 500. You can see there, sure, we've had this big run up, and now over here on the right, had kind of a rough week at the beginning a little bit, but when you really look at it, zooming in on the past 5 days, which is this chart right here, this is Monday all the way at the left. That was new highs in the SPY on Monday. Yeah, of this week, right? So, inflation got everybody's attention early in the week. Again, huge sell-off here, but we bounced up to about half of that. Really, when you look at yesterday, we basically recovered what Wednesday sold off, and today we've got some work to do to continue higher. But the futures are up about a percent with the NASDAQ, the Dow and the S&P 500 aren't up quite as much. Overall on the charts, as far as the setup, again, I'll have the SPY, I'll have dash long if you're interested in that, and then ACB short. All right, let's go ahead and take a look at the CNBC headlines. Here we go. Let me hit the room up again. Saw somebody just popped in. There's what we're talking about today, longs and short, or dash and ACB. All right, the headlines for today, here we go. You see the NASDAQ futures are up 1% like we talked about. Let's go around the world to Europe is in the green across the board. Pretty big, actually, almost 1% across the board. Here's our numbers in Asia. Wow, what a bounce, right? The Alibaba shares got hit hard after earnings, so that's been a house of pain as well. I still believe in the long-term story, and I will tell you that it would be crazy to sell your shares here. It really would. But you can't hold on to something forever, so it really depends on if there's a greater need out there, then that's what you should do. All right, here's our numbers from yesterday. If they're in, see 1% basically across the board, almost 1% up in the NASDAQ, and the volatility dropped a little bit, but not a significant amount. All right, bonds have kind of settled in that 1.6 range. Oil's really, the scarcity story from midweek is kind of faded with the pipeline restart, so I don't think people are freaking out as much anymore. Gold and silver are up after selling off earlier in the week. And then crypto is really the big story, so let's pause for a second here. Again, well, you see it down here in the middle lower there is everything really rallied after Elon Musk walked back what he had said from the previous day, and then started the conversation back up on cryptos and all of that. So, and should you be able to buy Tesla with Dogecoin was kind of got Doge going again. So Doge is close up to 50 cents or so if you're following that. I have a couple buddies, not clients, but buddies that are heavy into that. And of course, they think that's how you become mega millionaires. It's not the long game. You want to play the short, fast money game, and they're having fun with that. I'm having fun watching. But certainly when you get numbers like this, these are annual type numbers, right? The 8%, 9%. But for us, how our exposure to it is mostly through Bitcoin and GBTC. If you're still in that, 50,000 or so on a Bitcoin. All right, let's go over to the headlines. Let's take a look at a bunch of good earnings were out. Disney, I don't really buy this back up the truck thing. They did. They beat revenue, but they're losing subscribers. So I don't know. I'm not selling Disney here. I'm just not buying more. Disney's going to be fine in the long run, but they have not reinstated their dividend yet. I'm kind of shocked about that. I expected that out of this earnings. Snowflake has been absolutely crushed. I'll show you that chart here in a second. It is just unbelievable how much that is sold off. All right, let's start in with the charts now. All right, the first one I want to show you here is that Snowflake chart, just because it's so painful. And this was going to be our long for the day, but I just can't. It's a resurrection from the dead. I mean, look at how far this thing is sold off. So it was up in here in the 400s. Gosh, what was that? December. So at the beginning of the year, it's at 400. It's down at 188. Even though it's bouncing up by 8-9% today, I can't really get behind it as far as, wait, the wrong screen's up here. Let's get this corrected. I think that just switched. We shall see. There we go. All right, this is the Snowflake chart that I'm talking about. That has basically just crashed and burned, right? It's lost over 50%. That's pretty unbelievable, and no real signs of life. So, but as far as going back to our main topic of the day of generating income, while we wait for the market open. When you generate income, there's some of us that will stay, and I plan to stay basically total return forever. So I will dance with the one that brought me. Apple has basically changed my life as far as my Apple holdings, as far as the stock. And even though this chart isn't all that impressive, when you get to a retirement phase, you want to ask yourself, do you want to switch for out of total return, which is what got you there, to income generation? If you're living off of your income, then yes, all of those things I mentioned earlier, and we'll go through as many as we can here. You can do that and live off the income without selling shares. I do not have any problem selling shares. If I need to peel off a few shares of Apple to buy a car or something, then I will do it. No big deal, right? There comes a point when you're at that, a high enough level to where you shouldn't feel bad about that at all. However, if you want to take a different tack and start taking Apple out of your portfolio and getting into high dividend stocks like AT&T, which actually has gone higher here recently. Now this is $5 move, even though the chart looks like Apple, right? But it's not. It's just a $5 move. But when you really look at the dividend, it's paying off, a $2.08 per share in dividend, which it equates to a 6.5% yield. So that's pretty impressive, right? If you want to get into the real estate game, you can get into real estate investment trusts, which now O's gotten beat up. This is all the inflation / increasing interest rates, people being concerned about that. But O pays monthly dividends and overall yields around, get rid of that, 4.4%. So that's pretty good. And you get some capital appreciation over time, not instantly, but over time. So it's another way to generate income here. All right, we'll pause and get ready for the market open. Yeah, I saw that upgrade in snow. I just don't buy it. I mean, I can't get behind something that's been that dead. Yes, like Pfizer, love that from Apex there. Yeah, goodbye snowflakes. All right, let's switch over to the TD Ameritrade ThinkPipes platform. Get ready for the market open. All right, good morning, everyone. Welcome to the On Time, On Target play of the day. You have 3 panels in front of you, maybe 4, depending on your screen. On the far left, there's the opening bell. On the far left, we have the S&P 500. You can see it's up a percent. Dash is what I like as far as the long of the day. You can see it's up at 8% or so already. And then the short of the day, down 8% is ACB. So these fit into the heart of the envelope, excuse me, as far as our trading strategy. I really think Dash Long is a better story. You're looking at a $1.50 stop though, so just get ready for that. Low of the day is 124.20. We might be able to do a dollar stop. We'll see. We'll see if it hits below that. That would be getting us in at 125.20. Okay, it peeled below that all the way down to 124. It appears there's a buyer there because it keeps bouncing off of that. So we will use just below 124, 123.95 as the low point. If it holds, again, if that gets busted, then we have to be out. But 123.95, and we're going to go 124.95 on the high side. So it's going to be a $1 stop if this holds, because there's this big buyer right here. Okay, I see a lot of backing up in ACB. I'm not really interested in that right now. I'm going to try to get the entry here on Dash higher. I still think it's a, Friday, the masks are gone, kind of, happy mentality. So we'll see. All right, busted into a new low, 120. Oh, man. So 123.50 is now our low point of the day. Kind of want to take it right here higher, but I just can't. It's going to be a $1.50 stop, which I don't like nearly as much. There, it's coming up. We're going to wait for 125, and it shot right through it. So see what you can get in here as far as the price action. So 125 or as close to it as you can get. And then we are looking at a $1.50. So disregard this line right here. But I don't think it's going to go anywhere near it. So 126.50 is going to be our next. I don't have the ability to zoom out on the platform I'm in. So again, we are in long here at 125, or as close as you could get it to 125. Kind of jumped right through it on us, so that sucked. And going higher. So 126.50, 128. It's going higher fast enough, it's messing my arrow up. So again, 126.50, 128, and then out at 129.50 is our exit point there in Dash. If you wanted to take this short, again, high of the day would be 7. 10 cents is already here, so it really looks like you can't quite get in here. It's already gone too far. All right, we're up at the 1 hour point. We're 126.50. Again, you can see where now this $1.50 stop really is problematic, right? Because now the thing really has to go higher. All the way up to 129.50 is our exit point. Okay, we're going to leave that trade. If you're in that trade, pull that up on another screen there and dash. I do like it. I do not see it going back to the low of the day. It's already $3 away from it now. So I think that continues up, goes over 10% on the day, and then kind of holds there. All right, let's zoom out, see what's going on in the rest of the world. Bitcoin up 5.8% here. That's an Apple call that we talked about. C Unlimited, it's a tech firm. Coin saw that bouncing around. So, okay, let's talk about Coin for a second. Now, Coin has been super painful, right? Probably the most painful thing in my book, honestly, because most stuff, if it starts to annoy me that bad, I get rid of it. However, I wanted to wait and see on this guy, see if I've got all the days in here. There's everything from where it started trading on the first day. So really, it's been pretty painful. It did have one earnings in here. Didn't really say much, and then they just crushed earnings there. So I'm not inclined to get rid of it right away. I am going to give it a chance, but not much of one. And honestly, I'm just too irritated at it to continue on. But does it have upside? Yes. Best of breed, yes. Dogecoin's coming. They just announced that you're going to be able to trade your Doge on Coinbase, which is a big deal for all the Doge Nation that's out there following the Doge Father. So all of that's kind of a big deal. However, my concerns are there's going to be so that's like Schwab, right? It's like a full service best of breed custodian. Well, when you have Coinbase as best of breed, there is a room for discounters, Coin Wallet, other coin things that are popping up out there. So I don't know if their margin or moat is as solid as I would want it to be. So anyhow, keeping an eye on it like I always do. MNMD, Mind Medicine, we've talked about that before. Very speculative. Neo getting some love finally. Neo, wow, it was up. I want to say it was up at 80, and now it's down at 30. So again, Chinese automaker. Q-Clean, a lot of the clean energy EV stuff getting some love out there today. Moderna, ARK Fund, both ARK funds trading together there. All right, let's see what's down. TQLB, very Clickstream, very speculative. Disney's leading to the downside. Again, I'm not selling, I'm not buying, I'm just holding. Luckin's off a little bit, and then some other names. Home Depot and Lowe's both in the red. That's kind of surprising when the market's green across the board. But overall, a lot of stuff in the green, setting up for a nice green day here. All right, let's check back to our trade. All right, we almost got out of it. So 126.5, 128 is the second R point. And then 129.50 actually is making it on the screen, so that's pretty cool. It is up here, and again, that's our exit point. So to recap, again, we got it at 125. Lower end down here for protection is 123.50, and we're looking for 1, 2, 3 times our initial investment, which is up here at 129.50. I'd be out. I wouldn't expect it to be able to go much past. That's going to be like 12% on the day. So I wouldn't hold any of it. I'll just be happy when it hits it from there. Okay, let's talk about. Trying to see if ACB would have worked as well. Okay. Too early to tell. ACB would have to fall significantly from here to see if it would have worked. But again, we'll check back on our trade here in a little bit. I'm very optimistic that will pay off. All right, let's go back and take a look to our topic of the day. Okay, income generation. So again, we talked about Apple. So if you have total return, then that's what you like, and that's how you invest, then stay total return, right? If you don't, or you just don't want the risk, or you don't want the whole portfolio going up and down several $1,000, you just don't like the ride of the portfolio, then back it down. Go into some of these safer names. So we talked about Apple first being, if you want to stay total return, you can stay in the names that brought you. If you want to go to high dividend, you can go into names like T, or somebody brought up Pfizer. Absolutely agree. Nice high yielding names out there. You can go into real estate investment trusts like we've already looked at that. They pay a monthly dividend. That makes it easy on the bank account when dividends are going right in your bank account, right? You can go in private equity. There's two ways to do that. You can hold the stock of Blackstone, which is just the ticker BX. So since we'll take a look at that real quick, they pay a distribution. It's a dividend now, though. It's not a, so which means it varies. With others, with AT&T, as long as there's not a pandemic, you can count on basically getting the same amount of money like clockwork, right? And only if they cut their dividend, i.e. pandemic, are you going to see a change. Blackstone's a little bit different. Even though they listed here as a dividend, it's not fixed. You will not always get $2.69 a share. It's going to bounce around. Fortunately, they're past the K1 days, so I just got an internet unstable warning, so hopefully that's just coming through. But so you can go into private equity, and there's some different firms out there. It's another good way to round out that portfolio in retirement to generate income. So Main is business development. It also pays monthly. Main Street Capital Corporation, so they lend out to companies that can't necessarily borrow from banks as well, but you see they have a nice 6% dividend as well. You can go into preferreds, which I'm not going to bring up. You're not, or the close-end funds. The high yield I will bring up. So there's lots of these high yield bond funds out there. Or what I would do for you is just build a bond ladder. I like individual bonds better than bond funds. You know that. So we'll wait for HYGV to come up. It isn't yet. So let's see what's going on in the chat. Dropping choppy audio. Yep. I think my connection, hopefully it returns here. All right, let's get to the comment in the chat though. Is the assumption that you're not withdrawing money, get this moved, from your portfolio, thinking ahead to the day? Yeah. So here's how that works. So if with like an HYGV, you are withdrawing money from your portfolio, but you're doing it through the income it generates. So the way I have it set up for my retiree clients is I simply say at the end of every month, all the dividends and income that are generated go to their bank account. Now, some like that, but that's different, right? Because it's going to be choppy because it depends on when that income's coming in. What you can do, what I do for another client is I just basically set it at $4,000 a month. So they get $4,000 a month coming in no matter what. So it's really whatever the client wants. Now, the money's not coming out of thin air. It is coming out of the portfolio. But by generating income, you're not having to sell shares. Some people believe you should never, ever, 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 ever sell shares. I have no problem selling shares. When you look at, if you and I both have $1 million portfolios and I need to get $40,000, if you generate 4% on yours, you can get that in income without touching your shares, or I can sell $40,000 of Apple. Either way, right? And I would tell you that from a total return perspective, my portfolio is going to be worth more longer because I'm taking the risk, right? Which is the difference. But if once you're in retirement, it's kind of the why continue to take the risk if you don't need to take the risk. All those things that got you there can now switch into a more comfortable life of simply saying, I don't need to take all this risk. I just need the income that this machine that I spent my lifetime building generates. So it is really a different mindset shift. And also, once you step away from the workforce, most people aren't going back. So, it's a major decision. So anyhow, so kind of breaking it down, or to conclude, good comments there from both y'all. Thanks for participating. Anybody else, if you want to chime in, that'd be nice. But as far as the goal, again, over a lifetime is